Okay, so this is also called the Savers credit. This is one of those rare instances where you get to double dip. You can have a pre-tax deduction, and you can also take a credit for that amount. That is very unusual in the tax code. Usually they don't let you do that. Eligible individuals, so you can see eligible, so not everybody's eligible, take a tax credit based on contributions toward a retirement savings account. It's the amount contributed multiplied by a percentage somewhere between 0 and 50%, depends on AGI, of course. Well, again, modified AGI, so same definition for AGI. Contributions made to IRAs, 401ks, 403bs, 457s, simple plans, or set plans. This pretty much covers all of the retirement plan options that would be out there. Other qualified retirement plans. Distributions from these accounts also, though, reduce, the allowed contribution. So if you've got a distribution and you made a contribution, which maybe you did that in the year that you retired, right? So you contributed $2,000, but then you withdrew $2,000, they cancel each other out so that your full contribution is actually 0. Maximum contribution amount for the credit is $2,000 per person. So you can imagine if the maximum contribution is $2,000 and the maximum percentage is $2,000, the maximum credit is going to be $1,000 for this particular credit. $2,000 for each spouse, so that could be maximum $2,000 on the tax return. All right, so modified adjusted gross income up to $41,000 for a joint return, $30,750 for head of household, or $20,500 for single. 50% credit for the amounts that were contributed. So if you've got modified AGI, so you need to know the modified AGI, the filing status, and the amount of the contribution. So if we've got modified AGI of $30,000, filing status is, let's say, head of household, and they contributed $750 toward one of those retirement plans, then they would get to take a credit in the amount of 50% of the contribution that they made. So they would get a $375 credit. Now, the great thing is they also probably, like if they contributed to a 401k, that was pre-tax for income tax purposes. So they're getting an additional benefit from that contribution. And that's a pretty good rate of return, 50%, right off the bat, right? Between 41 and 44, so that's a much narrower range, and you can see these are much narrower too. That 50% becomes 20%. And then up to 68,000 is 10%. All right, so we've got Hector. Hector is single. Single's going to be here. Modified AGI of 25,000. So he is between 22 and 34. He made a $1,000 contribution. That means he's going to get a credit of $100 for that contribution. Okay. If he made, now remember, maybe he should have made more of a contribution, because that would bring him down into the 20% bracket. Like if he had contributed, let's say he contributed $5,000. So now his AGI is $20,000, right? That would bring him down to, actually that would bring him down to the 50% range, and he would get, remember the maximum is $2,000, but he'd get a $1,000 credit then for that. Right? You get $1,000 of that $5,000 back immediately in the form of reduced taxes. This is not a refundable credit as well. Let's see, anything else I want to say here? So Enrique and Lupe have AGI of $52,000. They're married filing jointly. They contributed $1,500 for Enrique, how much is their retirement savings contributions credit? So 52,000, married filing jointly. Is between here and here. 10% of the contribution. They contributed $1,500, so $150. Right? Questions? Yeah.
So a single taxpayer with modified AGI of 12,000 would get 50%, right?
Yep. I encourage those with lower incomes to contribute to retirement plans. Right? All right. So it's Form 8880 that is used. I guess they must be on the next page that they show that. Any questions in this one? No? Yeah, you do have a question?
No, I'm saying it's good.
Oh, okay. Yeah.
Non-refundable.
Non-refundable. Yeah. Exactly.
And is
So-
there a limit to that?
Is there what?
There's a limit, is there?
Yeah, a limit as far as, well, the maximum amount of credit is $1,000.
$1,000, okay.
Or actually, the maximum amount, I should say, not the maximum amount of credit, but the maximum, let's see, maximum contribution that can be counted toward the credit is $2,000. So
At the 50%, it's.
at the 50%, that would be 1,000, right? Right. So if you're not in the 50%, you're not gonna get $1,000.
Yeah, I have a little bit issue in the quiz, I don't know, in the quiz or in the homework,
Okay?
this problem starts, and then I'm use 50%, it's not working. After I'm get the result.
Okay, what's the problem? Do you have
But
it up?
it's single and then it's maybe 1250, that's the same thing. I'm get the result. After it's not working. Well, if you make of your course, I don't want to start.
Okay, well, let's,
Yeah, it's not working there. I'm get to.
Which number?
Number 6.
Yeah,
It's cause the limit's 1,000.
oh yeah.
so a single taxpayer with modified AGI of 12,000 and an IRA contribution of 2,300. But that 2,300 is limited to 2,000. So at 50%, right? Yep. So if you made a contribution of $10,000 and you're in the 10%, or sorry, $10,000 and you're in the 10,000 or the 10% range, you're not gonna get $1,000 because the limit is $2,000. So it's gonna be 10% of $2,000, or yeah, of $2,000 that you're gonna get. Does that make sense? Yeah.
I think so.
So it's a contribution that's limited, not the credit amount. Any other questions? Good questions, by the way. Okay. We'll go to the next one.